Welcome to part 3 of the price action trading course. So in this video, we are going to be covering in-depth analysis of the trend. We are going to be covering trend analysis, how to spot a reversal of the trend, how you can spot a reversal, and when you should stay out of the markets. And like always, I will be giving an important tip at the end of the video which will increase the accuracy of your trades by a significant level. I don't want you to watch this while skipping or just watching casually, because this is very important. So make sure you watch it when you have free time and when you can give it your undivided attention. So let's get started with the video. So now a quick revision. So I covered this in the part 1. So I just wanted to revise that there are only three types of trends. Can be a uptrend, it can be sideways market, and it can be a downtrend. So what most people would think is there is no need for in-depth analysis, like you can just see the chart going up and declare it as an uptrend. But the market does not move as per the textbook definitions. The market moves as it wants. So what we need to do is we need to understand what an uptrend consists of, what a downtrend consists of, and what a sideways market consists of. So let's get started. So now an uptrend is just a series of a higher highs and higher lows. So if a trend is continuously making higher highs and higher lows, then it is an uptrend. So now what are higher highs and what are higher lows? Let's get into that. So now the price formed a high, right? So this high is higher than the previous high. So it is obviously higher than this. So it is called a higher high. So over here now we can see the price moves back, pulls back a little bit and forms a low, right? So this is a low and this is another low. So but this low is higher than the previous low. So this is the previous low, but this is another low, but this is higher than the previous low, and so the name comes higher low. And then after that you can see the price moves up, forms a high. So now this high is higher than this high, so the name comes higher high. So this high is higher than the previous high, and so it is called a higher high. And then again you can see price pulls back a little bit, forms a low. This is a new low, and the low that is formed, it is higher than the previous low. So you can see this is the previous low, and now this new low, this is higher than the previous low, and then therefore the name comes higher low. So this is what you need to look for in an uptrend. So you will get more clarity when we do real life analysis, when we look at the charts and identify trends. So let's get into the charts and see some real life examples of an uptrend. Alright guys, so over here we have a real life example of an uptrend. So you can see the trend is beginning over here. The price forms a higher high. That means the high that is higher than the previous high. So this can be considered as the previous high, and now this high is higher, so it is a higher high. Then the price pulls back, forms a higher low, which is higher than the previous low, so higher low. And then the price goes up, forms a higher high, and then continues to form new higher highs and higher lows. So if you get confused whether the trend has stopped or reversed, then you just need to wait and look for if the price has formed a new higher high or a new higher low. So over here you can see the price went up a little bit but then halted, and then the price opened gap down below and then started going up. So at this point it is pretty normal to get the doubt that the price did not form a higher high, so the uptrend must be at the end. But you need to wait until the price forms a new higher high or a higher low. So you can see the price opened and then went ahead to form a new higher high, so that confirmed that the uptrend is still going on. And then the price formed another higher low and then a higher high. So over here you can see the price formed a higher high and then went on and came down, but did not form a higher low. So this was the previous higher low and this is equal to that, so we cannot consider it as a higher low. And then you can see the price did not continue the uptrend. The price is currently in a sideways market. So after that, so this indicated that the price that the uptrend has come to an end, as the price failed to form a new higher low. So this indicates that the price that the trend has come to an end, and you can see the stock is now in a sideways market. Over here you can see the stock is moving between this rectangle. So this is a sideways market. So this tells us that the trend has come to an end, and the now since that price is not forming new higher highs and higher lows, stock is now in a sideways market. So this was a real life analysis or trend analysis of an uptrend. Now we will move to the downtrend. Right, so now we will analyze the downtrend. So if you have understood the uptrend, you will easily understand the downtrend. So the downtrend is basically opposite of the uptrend. So like the uptrend consisted of higher highs and higher lows, the uptrend will be considering consisting of lower highs and lower lows. So let's start here. So you can see there is a high over here and the price falls down. It forms a new low. So now this low is lower than the previous low, and therefore the name lower low. So you can see now the price pulls back a little bit, goes up, and now forms a high. So you can see this high is lower than this high. So this was the previous high that the price formed, and now this is the new high. So the new high is lower than the previous high, and therefore the name comes lower high. And now you can see the price forms another low. So now this low is lower than the previous low. So this was the previous low. Now as the new low is lower than the previous low, it will be called a lower low. So that is how the downtrend works. So the downtrend consists of lower highs and lower lows. So you can see now the price forms another high, but this high is lower than the previous high, and therefore it is named as lower high, and that is what the downtrend consists of. So now let's get into some real examples and analyze some downtrend charts. Okay, guys, so over here we have a real life example of a downtrend. So the downtrend starts over here. You can see there's a lower high over here. So the downtrend begins here, then goes down, forms a lower low. So and then goes up again, forms a lower high. So this high, that is the new high that is formed, is lower than the previous high and hence lower high. And then the price goes down, forms a lower low, as this low is lower than the previous low, that is the lower low. So the name lower low, and then the price goes on, forms another lower high, lower low, keeps on doing that. So you can see this lower high is very close to this one, but it is still lower high, so we will still consider it as a downtrend. And you can see over here the trend failed to form a lower low over here, so it formed a higher low over here. This does not confirm that the downtrend has come to an end. So like I said, you need to wait for a new lower highs and new lower lows to form. So then you can see the price formed a lower high. So this confirmed that the downtrend has not ended yet. It is just indecisive. And then later than that, you can see a new lower low has been formed, and then the downtrend just keeps on continuing. So this was a real life example of the downtrend. I hope you have got the concept very well. Now we will go to the part where we identify how you can spot a reversal of the trend. So now coming to the trend reversal part on how you can spot a trend reversal. So like I said, a downtrend is a series of lower highs and lower lows, and an uptrend is a series of higher highs and higher lows. So what you need to look for is when the trend stops making so let's say if you are analyzing a downtrend over here, and if the trend stops making lower highs and lower lows and starts making higher lows and higher highs, that is the point when the trend is reversed from the downtrend towards the uptrend. So over here I have an example. So you can see a healthy downtrend is going on. It is forming lower lows and lower highs, lower lows and lower highs consistently. And then you can see over here after this lower low, it forms a lower high and then fails to form another lower low. So that shows the weakness of the downtrend. That means it shows that the sellers are not in control anymore, because they were not able to drive the price down and form a new lower low, and instead they formed a higher low. So as you can see over here, this does not confirm, this only shows that the trend has become weak. And now after that, you can see after this higher low, the price forms a higher high. So that is and it crosses the previous lower high. So this is the point where it is confirmed that the trend is reversed from the downtrend towards the uptrend. So you can see this lower high, I have marked a green line over here. So when the price crosses this part, the previous high, the lower high, when the price goes above that, that is when it is confirmed that the trend has reversed from the downtrend towards the uptrend. So you can see it crosses there, forms a higher high, then forms a higher low, and then continues to go up. So this was the reversal, how you can spot a reversal on the charts. So now obviously we are going to look at a real life example so to get more clarity. So now looking at a real life example of the trend reversal. So in this example, I have not marked higher lows and lower highs because I want you to identify them yourself and get more clarity. So that will ensure that you have understood the concept very well. So you can see the trend downtrend begins over here. It forms a lower high over here. There is a lower high here, and then goes down, forms a lower low, forms a lower high here again, then forms a lower low, then forms a lower high, and then forms another lower low. So you can see this was the previous lower high right here, and then after this lower low the price went up and took out this lower high. So what it did here is it formed a higher high, right? Because this is the lower high and this high is now higher than the previous high, but so it is a higher high, and after that it went down and formed a higher low. And then it was pretty confusing at this part, but like I said, if you are not sure where the trend is going, you need to wait for it and let it form a new higher high or a new higher low or a lower low or a lower high. And in this case the price went up and formed a higher high, formed a higher low here, and then kept on going up towards the uptrend. So this was a real life example of trend reversal toward from the downside towards the upside. So the other part of the reversal, that is the reversal from the uptrend towards the downtrend, it is everything is similar, just the opposite. That means in an uptrend you look for consistent higher highs and higher lows. So when the trend stops forming new higher highs and higher lows and starts forming lower highs and lower lows, that is when you know that the trend has been reversed from the uptrend towards the downtrend. So you can see over here the a healthy uptrend is going on, it is forming higher highs and higher lows, and after this higher high it forms a higher low but fails to form a new higher high. So this is what shows us that the trend has become weak since it formed a lower high but did not form a higher high. So this high is lower than this high and hence the name lower high, and this shows us the weakness of the trend, but this does not confirm that the trend has been reversed. When the trend confirmation, the trend reversal confirmation is done after the price crosses this previous higher low. So you can see it forms a lower low after this lower high, and this is what confirms that the trend has been reversed from the uptrend towards the downtrend. So this was just the concept that I explained previously, just the sides are opposite. So if you understand one concept, that is if you understand the uptrend concept, the downtrend becomes easier, and if you understand the downtrend, the uptrend becomes easier. So it might be looking very technical as of now, but as you start doing it on the chart, start doing it more often, it becomes very easy to spot. So now coming to another example of the trend reversal. So you can see over here the uptrend is beginning over here. So you can see the price goes up, forms a higher high here, forms a higher low over here, then goes up, forms a higher high, higher low here, higher high again, higher low here, higher high again, and then higher low here, and then it forms a higher high here, but the price goes down, takes out the previous lower high, and then this is the area that confirms the price reversal, because this part has taken out the previous higher low, and then it has crossed below that and went below. So this is the part that confirms that the uptrend has been reversed towards the downtrend, and then you can see the price keeps on going towards the downside. Alright guys, so now coming to the part where you need to stay out of the market. Here's an example over here. So you can see this chart was stuck between this range, this area. It was not forming any new highs or lows. So this is the sideways market, and this is the point where you need to stay out of the market. And you can see over here this the stock broke the range over here and still went below and then made a higher high and then continued towards the downside. So what you need to do is if you cannot spot a trend, do not force it, do not force trade in that trend, just let the market come to you. Do not chase the market, always let the market come to you. So after this broke this area, the range where it was stuck, this formed a clear downtrend and gave a good opportunity. So that is what you need to do. You need to wait for the market to form trends and give you signals. Do not force your analysis, and if you cannot spot anything on a particular chart, then just switch to a different chart. So that was it for the video, and the most important tip that I would like to give you is which will increase the uh, accuracy of your trades, is all you need to do is go to the weekly charts and analyze the trend. Currently the stock is in an uptrend on the weekly chart. So all you need to do is go to the weekly chart and analyze the trend of the stock, and if the stock is in an uptrend, then you need to look for buying opportunity on that chart, because then it will be more efficient as you are trading with the long term trend of the stock. So if you are analyzing a stock on the weekly chart, and if you see an uptrend, then do not do not look for selling opportunities on that stock, because you are going against the long term trend, and your trade won't be as efficient. So the simple trick here is, all you need to do is look for the long term trend of the chart and trade with that trend, and avoid trading against that trend. So that will help you increase the accuracy of your trades. So you can see over here, this stock is in an uptrend. It has not formed a new higher high over here, but it is not it has not confirmed that the uptrend has ended yet. So you can trade in an up you can trade towards the upside in this stock. So trading with the direction of the long term trend helps a lot in your trades, and it can also give you a lot of big moves. So that was it for the video. If you got value out of this video, make sure to share it with your friends who are into trading and who want to learn trading. I will see you soon. Thank you so much for watching. Make sure you subscribe.